I have a multi-bagger stock which is a relatively new phase on the Indian stock exchanges, but one backed by deep roots in the infrastructure supports and services sector. Listed on the BSE and NSE since June 2025 following its demerger from Quest Corp, Blue Spring has embarked on an ambitious journey to carve out a unique niche in India's burgeoning enterprise service landscape. Let's unpack what this company is, where it stands financially, and whether it holds potential for long-term growth investment. Blue Spring Enterprises operates across the broad domain of infrastructure management services, a suite of offerings that includes facility management, food services, security, industrial asset solution, and telecom infrastructure support. Its business spans over 28 Indian states and multiple verticals that benefit from rising corporate outsourcing, tier 2-3 expansion, and digital service integration. Its recurring revenue model and diversified service portfolio position Blue Spring a hybrid between a business services firm and industrial enabler, potentially insulating it from sector specific downturn. So Blue Spring top line growth trend is intact. In the full financial year 2025, the company reported revenue close to rupees 2,969 crores, representing a solid year-on-year increase of approximately 15%. So there is the second quarter of FY 2026 revenue of 837 crore, up by 14% year-on-year, and an impressive 19% growth in adjusted PAT indicate operational momentum is building, and EBITDA margins have bottomed out at around 3.5% to 4%, with the margins trending upwards sequentially, a positive sign for operating leverage and execution efficiency. Blue Spring's demergers from Quest Corp has freed it to pursue sector-specific growth with clear capital allocation and sharper operational focus. Management has articulated a target of 20% plus annual revenue growth, significantly outpacing project GDP growth, a core long-term aspirations. So EBITDA margin, let's talk about the EBITDA margin expansion, with the EBITDA margin expansion targeted to climb to 6% by 2030 and profitably rising sequentially. Let's talk about its diversified client base and sector exposure. Blue Spring is actively reducing client concentration and building revenue streams across 8 sectors, contributing 5% each, a classic risk mitigation strategy important in long duration investing. From infrastructure services to event management and global capability centers, Blue Spring is pushing into adjacent markets, a tactful strategy to broaden its addressable market without diluting core competencies. Let's see the debt reduction initiatives. The company's deliberate path to be debt free by 2028 through disciplined cash flow allocation towards debt retirement could materially strengthen the balance sheet over time and enhance shareholder confidence. So from a near-term valuation standpoint, Blue Spring Enterprises Limited has begun to attract institutional and retail interest as its post-demerger growth narrative transitions from early restructuring to operational execution, with revenue growth trend near the mid-teens and sequential margin improvement. Analysts and market participants are now re-rating the stock based on forward EBITDA rather than the legacy profitability metrics. If Blue Spring can maintain current revenue pacing and push EBITDA margins closer to the around 6% range over the next 2 to 3 quarters, the incremental operating leverage alone could justify a near-term valuation expansion. Additionally, its management's stated target on debt rationalization, diversification of verticals, and client mix improvement reduce concentration risk and bolster revenue visibility, factor typically rewarded by the market in early growth service companies. On a relative basis, peer in facility management, industrial support, and business service outsourcing often trade at richer forward multiple due to their contract stickiness and predictable cash cycle. Blue Spring trading at a discount to such comparable primarily because of its nascency as a standalone listed entity has scope for re-rating as earnings normalize and the company establish a multi-quarter profitable track record. If anyone assume revenue growth in 20% band, a progressive margin upstick The implied earning multiple support a 1 year fair value estimate in the region of 285 plus under moderate execution assumptions. A bullish scenario contingent on faster margin expansion, larger contract wins, or accelerate debt reduction could push valuation beyond the upper band. Thus, a 1 year target of 280 plus appears achievable provided the company sustains its operational cadence and broader macro conditions remain stable. While short-term volatility should be expected, the directional narrative remain upward biased for disciplined long-term investors. Despite encouraging trend, several key risks and caveats remain. Profitability metric is still evolving, net margins remain modest, and historically EBITDA margin contracted in earlier periods due to one-off cost associated with demerger. Dependence on large workforce, employee costs account for a significant proportions of total expenses, reflecting the labor intensive nature of services. A potential margin pinch point. Limited historical track record as an independent publicly listed company. Blue Springs earnings history is short, making multi-year trend analysis and valuation comparison more challenging for investor. Macro sector correlation, its performance correlate with broader infrastructure and services demand, meaning economic slowdowns or capex curtailment could impact growth pacing. For long-term investors willing to withstand early volatility, Blue Spring Enterprises presents a strategical positioned growth-oriented enterprises with a clear roadmap, a strong revenue growth trajectory backed by diversified services, improving operational efficiency and margin expansion goals, long-term structure initiatives like debt reduction and market diversification. However, this is a long-term play, not a short-term trade. The stock's performance will hinge on consistent execution of strategic goals and company's ability to convert scale into sustainable profit. With the infrastructure demand rising in India and a growing appetite for outsourced enterprises services, Blue Spring's journey from post-demerger beginnings towards mature, profitable operations make it stocks to watch over the long horizon. So guys, that's all for the Blue Spring. We'll see you in the next video. So guys, thank you for watching.